One legendary prediction made Michael Burry famous, but was he a genius every time, or has Wall Street been giving him too much credit? Whenever Michael Burry files new positions, financial media explodes with headlines. If he buys a stock, investors rush to figure out why. If he shorts a company, people immediately start looking for hidden problems. His reputation has become so powerful that a single regulatory filing can move markets and spark endless debates online. But here's the question that rarely gets asked. How accurate has Michael Burry actually been? Most people know him as the guy who predicted the 2008 financial crisis. That achievement alone secured his place in investing history. However, over the last 2 decades, Burry has made dozens of bullish and bearish calls. Some turned into spectacular successes, others were early, and a few simply didn't work out. So instead of treating him as either an investing genius or an eternal bear, let's look at his biggest public calls and see what history actually says. In the early 2000s, almost everyone believed US. Home prices would continue rising forever. Banks were handing out mortgages to borrowers with weak credit, then packaging those loans into complex securities that were sold to investors around the world. Wall Street believed the system was safe. Burry disagreed. Instead of following the crowd, he spent months reading thousands of pages of mortgage documents. He noticed something that many large institutions ignored. A growing number of homeowners would eventually be unable to repay their loans once introductory interest rates expired. Rather than simply betting against housing stocks, Burry bought credit default swaps that would pay off if mortgage-backed securities collapsed. At the time, almost nobody agreed with him. Investors questioned his judgment. Clients demanded their money back. Banks happily took the other side of his trade because they believed the odds of a nationwide housing collapse were tiny. Then 2008 happened. The housing market imploded, major financial institutions failed, and the global economy entered its worst recession since the Great Depression. Burry's fund reportedly earned hundreds of millions of dollars, while his investors made roughly $700 million in profits. This wasn't just a good investment. It became one of the greatest trades in modern financial history. His success was later immortalized in The Big Short, instantly turning him into one of the world's most recognizable investors. Calling out the meme stock frenzy around the same period, meme stocks became one of the biggest stories on Wall Street. Companies with weak fundamentals suddenly saw their stock prices multiply because of social media enthusiasm and coordinated buying. Millions of new investors entered the market during this period. Some believed traditional valuation no longer mattered. Burry disagreed. He argued that many of these stocks had become disconnected from economic reality. Eventually, many of those companies experienced dramatic declines as excitement faded and fundamentals once again became important. This became another example of Burry identifying speculative excess before markets corrected. Inflation, a rare early warning. Perhaps one of Burry's most underrated predictions involved inflation. After the pandemic, many economists argued that rising prices would only be temporary. Central banks also expected inflation to fade relatively quickly. Burry took the opposite side. He warned that massive stimulus spending, supply chain disruptions, and strong consumer demand could keep inflation elevated for much longer than markets expected. History largely supported his view. Inflation reached levels not seen in decades. Central banks around the world responded with aggressive interest rate hikes, dramatically changing the investment landscape. Although he wasn't the only investor making this argument. Burry recognized the risk before it became widely accepted. Electric vehicle valuations, another recurring theme in Burry's investing, has been skepticism toward expensive growth stocks. During the electric vehicle boom, valuations soared as investors priced in years of future growth. Some companies with limited production achieved market values larger than established automakers. Burry questioned whether those expectations were realistic. Several electric vehicle stocks later experienced enormous declines as higher interest rates reduced investor appetite for high-growth companies. This doesn't mean every EV company failed. Some remain industry leaders. But his broader warning about stretched valuations turned out to be reasonable. His Tesla bet one of Burry's most discussed positions involved Tesla. He publicly disclosed a bearish position against the electric vehicle giant, arguing that the stock's valuation had become excessive. Initially, many investors believed he would be proven right. Instead, Tesla continued climbing and eventually reached even higher highs before later experiencing significant volatility. This illustrates an important point. Being correct about valuation doesn't necessarily mean being correct about timing. Markets can remain optimistic far longer than expected. Even if an asset eventually declines, an investor can still lose money if the timing is wrong. That's one reason why short selling remains one of the most difficult strategies in investing. The famous 2023 bearish bet in 2023, regulatory filings revealed that Burry had purchased large put options against major US stock indexes. Financial headlines immediately declared that he was betting billions against the market. Social media exploded with speculation. However, a few months later, updated filings suggested that many of those positions had already been closed. Because regulatory filings only provide snapshots at specific dates, investors never learned exactly how profitable or unprofitable the trade actually was. This serves as an important reminder. Public filings rarely tell the complete story. Professional investors frequently adjust positions long before the public sees updated information. Betting on Japan, not every famous Burry trade has been bearish. One of his more successful recent positions involved Japanese equities. While much of the investing world remained focused on the United States, Burry increased exposure to Japanese companies. Over the following months, Japan's stock market delivered strong performance, supported by improving corporate governance, shareholder reforms. If you enjoyed this breakdown, like the video, subscribe to the channel and drop a comment below letting us know which legendary investor you want us to analyze next. Thanks for watching, and we'll catch you in the next one.